Good afternoon, my 111 students. So this video is discussion on transaction analysis. So before we analyze transactions, let us introduce and be familiar first with the types and effects of transactions. So the first type of transaction is what we call SA, that stands for source of assets. So this is described as transactions that has an increase in assets and also has an effect of increasing liabilities or owner's equity. So in this here, in the summary, in the accounting equation, which is assets is equal to liabilities plus owner's equity, so it is a source of asset when it has an effect of having the assets increased and a corresponding increase on owner's equity. Or in here, the second case, an increase in assets and an increase in liabilities and no effect on owner's equity. Another type of transaction is exchange of assets. So in this transaction, there is no effect on the total assets. It's still the same amount. However, one component of asset has increased and another component of asset decreased. So therefore, it has no effect on liabilities and owner's equity. So as you can see here in the accounting equation, so exchange of assets has positive and negative for the assets and then 0 and 0 for liabilities and owner's equity. The next type of transaction is use of assets or UA. So transactions that decreases assets and decreases either the owner's equity in the form of increase in expenses or decreases the liability. So to describe or to illustrate this in the basic accounting equation, so use of assets has effect of having assets decrease and also decrease in owner's equity because in expenses increase. The second case is that there is assets decrease with corresponding decrease in liabilities and no effect on the owner's equity. So this illustrative cases on the effect of the accounting equation will be illustrated in the later slides for transactions as an example of these types and effects of transactions. Number 4 is exchange of claims, so EC. So transactions that has no effect on assets. As you can see on the summary here for the basic accounting equation, the first case assets is 0 and the second case also is 0 because EC, this is a transaction that has no effect on asset. So this is either increase in the owner's equity with corresponding decrease in liability, which is illustrated on the second case. So this one, 0, and then decrease in liabilities, so negative, and then increase in owner's equity, so positive. And the second case in which there is a decrease in owner's equity, so there is an increase, the first case, so negative ang owner's equity, with corresponding increase in liability, so positive. So again, the assets is 0, so meaning no effect. So analyzing these four types, it's very easy for students to identify SA, EA, and UA because when we say SA, there is increase in assets. EA, only assets are affected. UA, there is decrease in assets. So for EC or exchange of claims, there should be an understanding that there is no effect on assets. So only the liabilities and owner's equity component. So in the next slide, we will illustrate samples that illustrates these cases. Before that, we also have to understand that in analyzing transaction, we should know that debit is always equal to credit. So that means the amount debited is equal to the account credited. So if debit is 500,000, credit should also be 500,000. So that is always equal in every transaction. So another term to describe debit is value received and credit as value parted with. So to start with our transaction analysis, we have heard the first transaction. Mr. X invested 100,000 to start the business. So Mr. X here is the owner of the business who placed cash 100,000 to the business. So you will analyze on the viewpoint of the business. So the business now receives cash. So therefore, cash increased. So we place the cash on the debit side. And X capital increased because the owner placed cash on the business. So capital of X increased. So to increase capital, the normal balance is credit. So we have to place it on the credit side. So X capital is credit. So the effect on the accounting equation, cash is increased, so therefore positive. No effect on liabilities because both the account, cash and X capital, it is not liability. Then the owner's equity increased because X capital increased, and that is an owner's equity account. So because assets increase, this is a type of transaction that is described as source of asset. Next transaction is purchased equipment for cash, 20,000. So the business here has purchased equipment, so the equipment of the business increased. So to increase an asset is to place it on the debit side, which is its normal balance. And then the company paid cash of 20,000, so therefore cash decreased. So to decrease cash, which is an asset, you place it on the credit side. So the opposite of its normal balance. So credit cash. So the effect on the accounting equation, the asset equipment increased while the asset cash decreased, and there is no effect on liabilities and owner's equity, so that's why they are both zero. So therefore, only assets are affected. So the type of transaction described herein is exchange of assets. Purchased supplies on account, 5,000. So the company here increased its supplies because it purchased supplies. So to increase supplies is to place it on the debit side. So debit supplies. And then since the company did not pay it but through cash, so it made the purchase on account. Therefore, the liability of the company increased. So the accounts payable is to be placed on the credit side because the increased side of liabilities is on the credit side. So in the accounting equation now, supplies increase, so assets increase, positive. Liabilities increase, so positive. And no effect on owner's equity since there is no account title here that represents owner's equity. So the type of transaction that has occurred is source of assets because asset increased. Next is made partial payment to the account, 3,000. So when the company or when the business paid 3,000 pesos of its liability, therefore liability decreased. So to decrease the liability, we place it on the debit side because its normal balance or increased side is credit. So to decrease it, place it on the debit side. And then for cash, when the company paid the liability of 3,000, so that the cash decreased. So credit cash because the normal balance of assets are on the debit side. So to decrease it, put it on the credit side. So to place it on the equation, so assets decrease because cash decreased, and the liabilities also decrease because accounts payable was debited, and owner's equity is zero or no effects since there is no account title that affects here on owner's equity. So the type of transactions is use of assets because assets decrease. Next transaction is the owner withdraw 10,000 for personal use. So the account title that is used for every time the owner withdraw cash from the business or withdraw something from the business to be used for personal use is the account title, which is withdrawal or drawing. So we place it on the debit side, X withdrawal or X drawing, to record the withdrawals of the owner. And then we credit cash because cash of the business decreased because it was taken out by the owner for personal use. So to decrease cash is to place it on the credit side. So the effect on the accounting equation is that assets decreased because cash decreased, so negative. Liabilities not affected or zero because in the accounts debited and credited, there is no liability account title. Owner's equity decreased because X withdrawal increased, and this is a temporary account or contra account of your capital. So that will eventually ultimately reduce your capital, so decrease. So this is a use of assets type of transaction because assets decreased. Next transaction is received 8,000 cash from customers for services rendered. So when the company rendered services, so that is a service income. So income increased. To increase income is to place it on the credit side. So that's why we place here credit service income. Then, since the company received cash, so the cash of the business increased. So to increase cash is to place it on the debit side. So debit cash. Then on the effect on the accounting equation, so assets increased because cash is an asset, so increased. Liabilities is not affected, so zero. Owner's equity increased because service income is technically increasing your capital, so increase. So this is the source of assets because assets increased. Next transaction is the rendering of services to customers on account 12,000. So translate it to Tagalog, this means that the company provided services to customers on credit. So meaning, the customer, hindi siya nagbayad. Pero ang company, na-render na niya yung service. So naibigay na yung service show. So therefore, it's still service income because the services are already rendered. So the credit here is service income because income increased. So to increase income is to place it on the credit side. But since the company did not receive cash, so it has collectible from customers. So the account title that describes for collectible from customers is accounts receivable. So we place it on the debit side because our collectible from customers increased when we render to customer on credit. So debit accounts receivable. The effect on the accounting equation, assets increased, so positive, liabilities zero because there is no account title, that is a liability here. Then owner's equity increased because service income will technically increase your capital. So this type of transaction is a source of assets because assets increased. Next is collected the account of customers 12,000. So in here, that means that the customer has paid its credit to the company. So the company now receives the cash. So that's why cash increased. So place it on the debit side. And then the collectible from customers will now be decreased since it was already collected. So to decrease accounts receivable is to place it on the credit side because the normal balance of assets is on the debit side. So to decrease it, place it on the credit side. So the effect on the accounting equation, assets, cash increased, but another asset in the form of accounts receivable decreased. So assets is positive, negative, liabilities and owner's equity 0 and 0. So therefore, this is an exchange of assets because it only affects assets and no effect on liabilities and owner's equity. Next is paid salaries of employees 15,000. So since the employees are being paid their salaries, that means they have rendered their services to their company. So there is a salaries expense to be recorded by the company. So debit salaries expense because expense here increased, so place it on the debit side. And we place credit cash because cash here decreased since the business used cash to pay the employees' salaries. So the effect on the accounting equation, assets decreased because cash decreased, and no effect on liabilities because there is no account title here representing liability. And then owner's equity decreased in the form of increase in expense because every time expense will increase, capital will decrease. So this type of transaction here is a use of asset because there is a decrease in assets. The next transaction, bought equipment for 50,000 and made a down payment of 30,000 with the balance payable in 30 days. So, bought equipment, so meaning the equipment of the business increased. So, to increase equipment, place it on the debit side. And then, since the company paid cash, so the credit is cash because the business cash is decreased. And then, since the 20,000 is to be payable in 30 days, so that means that the liability of the business increased. So, to increase the liability of the business, place the liability on the credit side. And this is accounts payable because the company did not issue a promissory note. So this is an open account. So accounts payable is credited. So effect on accounting equation. So assets in the form of equipment increased and assets in the form of cash decreased and liabilities in the form of accounts payable increased and no effect on owner's equity. So this is not an exchange of assets because not only assets is affected, but it also, the liabilities is also affected. So this is a source of assets. Render service to customer worth 40,000. Down payment received from customer 10,000 and the balance collectible in 30 days. So the business received cash from the customer. So cash is 10,000. And the balance is to be collected in 30 days. So that is accounts receivable, account title. So debit because the collectible from customers increased. So we place the accounts receivable on the debit side to increase it since that is an asset. And then why is this we receive cash and an accounts receivable from customer is that because of rendering of services. So that is actually service income. So service income increased, therefore we place it on the credit side. So please take note, your total debits is 10 and 30, so 40,000, while your credit is 40,000. So this illustrates that always in every transaction, debit is equal to credit. So the effect on accounting equation, assets in the form of cash and accounts receivable increased. Liabilities, no effect because there is no account title that represents here a liability. Owner's equity increased because service income will eventually increase your owner's equity or capital. So this is a source of assets because assets increase. Next is the last one, the transaction analysis for EC or exchange of claims. So in the previous first slide, the EC has an effect on accounting equation as assets 0, then liabilities increase, owner's equity decrease, and the second case is that 0 assets, no effect on assets, liabilities decreased, owner's equity increased. So therefore, it is described as having no effect on asset. So to give an example, we have salaries of employees are unpaid during the end of the accounting period. So since the employees has rendered their services to the company, so the company has incurred the salaries expense. So to increase salaries expense is to place it on the debit side. So debit salaries expense. And then since the company did not pay yet the employees, so that is liability in the form of salaries payable. So place the salaries payable on the credit side because the liability of the company increased since it was not able yet to pay the salaries of the employees. So in the accounting equation, the account titles did not affect assets, so 0. Liabilities increased because salaries payable is credited. And then owner's equity decreased because expenses increased, so the capital will decrease. Technically, the net effect is decrease in owner's equity. So this is the first case of your example on exchange of claims. Second example is rendered services to clients who had made advance payments the previous month. So meaning, the clients already made their advance payments. Tapos, ngayong month lang na ito, naka-render ng services ang business. So therefore, di ba yung advance payments made by the clients, that is unearned service income. So, ngayon, so liability yan siya. Pero the moment na the company renders the services, it will cancel the liability and will record the service income because the services now has been rendered. So to cancel the liability or to reduce the liability, so we debit unearned service income and we credit service income because it has now already been earned by the business since the services has been rendered. So in effect, in the accounting equation, no effect on assets because there is no account title here that represents an asset, so 0. Liabilities decreased because we debited unearned service income, that is a liability account title. And liabilities decrease side is on the debit side because its normal balance is on the credit side. And then owner's equity here is positive or increased because we credited service income, and service income increased has an effect of increasing owner's equity. So this is an example, and again, of a type of transaction which is exchange of claims. And that's all for this discussion. Thank you.